For a long time, business was obsessed with speed. Speed of growth, speed of expansion, speed of results. Everything was about moving faster than everyone else, launch quickly, scale aggressively, capture the market, and worry about the details later. That was the dominant mindset. But now something is changing. Long-term thinking is coming back into focus, and one of the main reasons for this shift is prolonged uncertainty. For much of the past decade, businesses have operated in an environment shaped by repeated shocks rather than steady cycles. Supply chain disruptions, rapid policy changes, interest rate swings, labor shortages, and technology shifts have shortened planning confidence. When conditions change faster than strategies can be executed, long-term plans lose practical relevance. As a result, leaders have learned to prioritize what keeps the business stable in the next quarter or year, rather than what might pay off in 5. Short-term resilience focuses on protecting cash flow, maintaining operational continuity, and preserving optionality. Long-term vision, while still discussed, becomes secondary when survival and flexibility are at stake. Capital allocation decisions reveal this change clearly. Long-term vision traditionally justified heavy upfront investment with delayed returns. Today, many companies are reluctant to commit capital to projects that cannot demonstrate near-term resilience benefits. Investments are increasingly staged, reversible, or scoped narrowly to limit exposure. Projects that depend on stable long-term assumptions struggle to get approved. This does not mean companies have stopped investing. It means investment is framed differently. Instead of funding grand transformations, companies fund incremental improvements that strengthen the business under multiple scenarios. Resilience becomes the filter through which vision must pass. Performance management systems reinforce this behavior. When leaders are evaluated on short-term metrics such as cash preservation, margin protection, and forecast accuracy, decision-making naturally shifts. Even executives who believe in long-term vision feel pressure to prioritize what can be defended in the next reporting cycle. Over time, this shapes organizational behavior more than strategy documents ever could. Forecast credibility has become especially important. Missing long-term goals used to be tolerated if the strategic narrative remained compelling. Today, repeated forecast misses damaged trust quickly. Short-term resilience supports more reliable projections, even if it limits long-range ambition. Companies increasingly choose predictability over promise. Operational design has also adapted. Long-term vision often assumes stable growth paths and consistent demand. Short-term resilience assumes disruption is constant. Businesses are therefore being built to absorb shocks rather than optimize for distant scale. Redundancy, flexibility, and modularity are valued more than efficiency at peak conditions. This mindset shows up in hiring, supply chain design, and technology choices. Instead of building for maximum efficiency years down the line, companies build systems that can adjust quickly. Resilient systems may be less elegant, but they reduce the risk of catastrophic failure. In practice, they crowd out long-term visionary bets that depend on fragile assumptions. Innovation has not disappeared, but its form has changed. Long-term vision once encouraged moonshot projects with uncertain timelines. Today, innovation is often constrained to near-term applicability. Projects must demonstrate relevance quickly, or they are paused. Learning cycles are shorter, and tolerance for prolonged experimentation is lower. This creates a paradox. Companies still want to innovate, but they want innovation to behave predictably. Short-term resilience reshapes innovation into incremental progress rather than transformational leaps. Over time, this alters the strategic character of organizations. Workforce dynamics further reinforce the shift. Employees who have lived through repeated restructurings, hiring freezes, and strategy reversals are often skeptical of long-term promises. Leaders respond by focusing on immediate stability, job protection, and manageable workloads. This builds trust in the short term but reduces appetite for long-horizon change. Culturally, resilience feels safer than vision. Vision asks people to commit to uncertain futures. Resilience asks them to manage present realities. In volatile environments, the latter is easier to sustain. Investor expectations play a powerful role as well. Markets increasingly reward companies that demonstrate downside protection and consistent execution. businesses that prioritize long-term vision at the expense of near-term resilience, risk sharp valuation corrections if conditions change. Executives internalize this signal. Strategy becomes defensive, even when opportunity exists. Importantly, the replacement of long-term vision by short-term resilience is not usually explicit. Companies do not announce that they are thinking smaller. Instead, the shift happens through countless micro-decisions. Projects are delayed, commitments are softened, language becomes conditional, vision statements remain aspirational, but operating plans become cautious. Over time, this creates a strategic gap. Organizations may still believe they are guided by long-term vision, while their actions are governed almost entirely by short-term resilience. This gap can persist unnoticed because resilience often delivers acceptable results, especially in unstable environments. The risk is not immediate failure. The risk is gradual strategic drift. When resilience dominates for too long, companies may struggle to position themselves for structural change. They become excellent at surviving turbulence, but less prepared to shape the future when conditions stabilize. Still, in the current environment, the preference is understandable. Short-term resilience offers control in a world that feels uncontrollable. It allows leaders to respond, adjust, and defend rather than commit and hope. How short-term resilience is replacing long-term vision in practice is ultimately a story about trust in the future. When confidence in long-term predictability declines, strategy naturally collapses inward. Companies do not abandon vision because they lack ambition. They do it because resilience feels like the only strategy that reliably works. The challenge ahead is not choosing between resilience and vision, but learning how to reconnect them. Until then, short-term resilience will continue to quietly dominate how businesses actually operate, regardless of what their long-term plans claim.